It's early August 2023 and time for your midsummer Toronto real estate market update. In this video, I'm going to go over the story of Toronto real estate, which continues to feel heavy whiplash this summer after experiencing the highs of the spring market. I'm going to touch on the mess of the pre-construction and assignment market in Toronto and give reasons for why everyone is freaking out about being able to close on their newly finished homes. And I'm going to wrap up my update with why the Toronto area real estate market will not be able to crash in the upcoming 3 to 5 years, and explain why after we exit out of this period of high interest rates and uncertainty, we're pretty likely to see home prices rise further. If this is your first time watching, my name is Jonathan Lee and I'm a Toronto area real estate agent based out of Etobicoke. If you like Etobicoke and West End Toronto real estate content, click subscribe. I aim to release a video a week and I'm on nearly a 20-week streak of producing. The Toronto area real estate market continues to stay contracted this summer, with reduced sales and average prices dropping for the second month in a row to an average price in the city of Toronto of $1,066,000 combined between condos and houses. This is not a huge surprise. In fact, the Toronto real estate market slows down every year over the summer, but it happened early this year, mostly due to the last 2 rate hikes in June and July, which quite frankly have been brutal on the summer market, which is already typically a slow time of year. Month over month from June, the number of sales transactions has dropped about 33%. That is about double to what you might see in a quote unquote normal summer market, which I just want to point out we haven't experienced for the last 3 years. What I'm seeing on the ground is most of the price gains the market made this past spring have been wiped out. So rather than seeing prices stay flat or even grow slightly from where they were in April and May, we're sort of back to February-ish prices, still sort of up from where we were, I'd say, last fall 2022. But my video from this past May proclaiming that buyers are back is not aging well. I've said it a bunch on my videos on YouTube and on Instagram, but even in an ordinary year, many buyers and sellers that have motivation to move will check out over the summer months because the summer in Toronto is only 3 short months, and you all know the winter is long here. What the last 2 rate hikes have done has given the majority of potential movers a very good reason to stop looking completely and check out of interacting and tracking the market, at least until September. For most, rates are just too high to take on additional debt, so they're delaying the idea of moving. Long term, I don't expect a market crash, but this fall, the market will certainly reset as it enters a new season known as the fall market. Will it be better, more of the same, or worse? Well, no one can say. The Bank of Canada hasn't nixed the idea of rates rising again with their next announcement set for September 6th, and with the last US rate hike of 25 basis points in July, the Canada bond yield inched up to just under 4%, suggesting the market is expecting another rate hike. If rates rise again, it could continue to keep real estate prices lower for the rest of the year. Generally, the fall market has a smaller and shorter peak than the spring market, so even if rates stay the same, I don't expect a mad rush of buyers and movers returning to the market, as most upsizers and downsizers prefer to buy in the spring, closing 60 to 90 days later in the summer. However, the perspective of time never gets mentioned in the news cycles and in being a deciding factor for potential home movers. But we're on a timeline between a period of high interest rates and lower interest rates, which who knows what that might be, maybe 3-4%, and we don't know when that's going to happen. But the market is keenly aware that we're not at the start of the high interest rate period, and as more time passes, it's also anticipating the approaching period of lower rates, whatever that might be, in 9 months, in a year, in 1.5 years, in 2 years. There are a lot of people out there that have motivation to move, but are waiting it out, timing the market and hoping to get as close to a period when rates start dropping so they can take advantage of prices being low while only having to service a high rate mortgage for a relatively short period of time. I know this because I'm talking to many people in this situation. Everyone is aware that once rates start dropping again, prices will rise rapidly and therefore are trying to avoid getting caught up in that market. But when exactly the majority of the market timers will come out, be it fall 2023, spring 2024, fall 2024, whenever that happens, hold on to your hats because we're going to be reading some crazy headlines that will be having difficulty making sense of the market. The pre-construction market is a husk of itself. I chat with a couple pre-con guys here and there, and as much as the Toronto resale real estate market has contracted, resale meaning the properties aren't being sold for the first time, they're being resold to a new buyer, the pre-construction market is crickets. Hardly anyone is buying anything pre-construction these days, and for good good reason. Honestly, you don't buy a deal with pre-construction. You buy an opportunity. In fact, you're buying above resale market prices on a price per square foot basis. Long gone are the days when pre-construction prices were comparable to resale prices. With the extremely high cost of labor and the high development fees charged to the builders and developers by municipalities and passed on to the buyers, pre-con buyers pay an inflated cost that is priced ahead of where the market will be. Currently, these prices are between 20 to 30% above what the resale price for a comparably configured unit would be. I say configured because there's a good chance the unit will be smaller with a more efficient layout but have higher ceilings. A one-bedroom condo built 10 to 15 years ago might be around 600 square feet, while today it would be under 500 square feet. Note that even though resale prices have responded to the change in market dynamics with prices dropping, pre-construction prices haven't dropped very much because they can't due to the high labor and material and development charges. Okay, so who cares, right? Right. Well, the big problem is a number of condo completions that are in line over the next year to 2 years, especially the ones that were purchased between 2019 to 2022 when resale prices were high to justify the high pre-con prices. Many of those buyers can't close on their sale due to a combination, firstly, of high rates. So while the buyers would have qualified for the mortgages back in 2020 or 2021 when rates were really low, they are really struggling to do so now with rates sky high. And second, due to resale prices having dropped so much, newly built units are appraising lower than the original purchase price, and banks are refusing to mortgage the full purchase amount of brand new properties. In those cases, it's up to the buyers to find a way to pay the gap. Say you bought a $1 million pre-construction property. If the bank believes it's only worth $900,000, as a buyer, you need to find a way to get the remaining $100,000 to close. This is resulting in a flood of pre-con buyers attempting to assign their units at very low or no profit, or in some cases, selling them at a loss before they absolutely have to close. For those unaware, an assignment is when you sell off your contract to a new buyer who then takes it over. Many assignment sellers are struggling to find buyers to take on their contracts. And in other instances, we're even seeing cases of pre-construction fires popping up all over the GTA, potentially due to arson to delay or cancel the projects. This is producing disastrous results for the pre-con market, whose only savior will be rates dropping and home prices rising once again. Which brings me to my last point for why the Toronto area real estate market can't crash. Last year, Canada welcomed nearly 500,000 new immigrants and plans for another 500,000 immigrants each year in 2023, 2024, and 2025. This is nearly double the average number of annual new immigrants taken in each year for the previous 20 years. With nearly 1.5 new immigrants planned in Canada over the next 2.5 years, many of whom will settle in the GTA, and hardly any new housing being built due to high interest rates, as builders need to borrow money to build, it's nearly an impossibility for resale prices to fall significantly more. We're not letting it fall. Toronto real estate is a candle being lit on both ends, with more demand being brought in and supply being shrunk by high rates. And it's really frustrating to wonder what the policymakers are imagining as the end game for these decisions, because it seems obvious to a lot of Canadians that this will play out poorly. But I guess when we look at things in our recent history, like slashing interest rates at the start of the pandemic and stating that they'll stay low for a long time, our policymakers tend to overcorrect rather than take a pragmatic approach. So that wraps up this month's market update. If you want to get in touch to chat about Toronto real estate, you can schedule a call with me by clicking on the Calendly link below in the description. I'll see you guys in the next one. Cheers.